Before we even start, I'm just going to start, with a little disclaimer here. If you're someone who's watching this and you haven't filed a return yet, you're late to file, this may scare you. I'm not going to lie. I'm just going to be very direct here. This may really scare you, and you might really not like what I'm about to tell you. But if that's you, I do encourage you to, stomach the discomfort you're going to experience with these numbers and watch the video through to the end. Because if that's you, if you're in this position right now, then maybe this video and me showing you how these numbers work will be the thing that you need to push you into fixing your problem. And the whole reason we create this content is to help people fix their problems. So if you're in that situation, I'm giving you the disclaimer. I'm being upfront with you right now, but I implore you, be patient with me here. I'm going to give you stuff that's going to ultimately help you in the long run. So one of my most requested videos right in time here as we just get past the June 15th deadline. What is the penalty if you do not file a tax return? That's what we're going to talk about in this video. I'm going to go over a few different things, actually. We're going to talk about the penalties for 1040s, which is your personal tax return. We're going to talk about the penalties for business returns as well. So I'm going to cover 1065 partnerships in this. I'm going to cover 1120S S Corp returns in this. So if we look on the screen here, so you should be able to see my screen right now, and what we're looking at here is the IRS website. I have a couple tabs here. I'm going to go through the information with you, but before I get into the nitty-gritty, I wanted to say something here. It's important when you're looking for information like this that you only go the official source. So in this case, we're talking about penalties and interest that are issued by the Internal Revenue Service relative to federal tax returns, which everyone files every year. The reason I'm bringing this up is because here in one of my other tabs, I actually have a private website. This is inkfile.com, and there's a lot of sites that publish tax information. There's Inkfile, there is Intuit, there's H&R Block. A lot of these guys will publish content and put it online, and it'll SEO it so you get it in Google. But here's the problem here. There's a line in here that I want to show you. It's important to remember that unofficial sources are unofficial, and I'm going to show you why this is unofficial. So here we have a little paragraph here. This is what it says. Each individual shareholder will need to file a Form 1120-S, which is an S Corp's annual business return. The 1120-S is part of the Schedule K-1 document. So here's the problem with this paragraph. First and foremost, no. Each individual shareholder does not file an 1120-S. So what this refers to is, let's say that you own an S corporation with a partner. So there's more than one of you. The way this is going to work is the corporation itself, the LLC or the corp, whatever you create and has CIN, that's going to file this Form 1120-S. That's its business tax return. The 1120-S generates a Schedule K-1 document. So this second sentence here, the 1120-S is part of the Schedule K-1 document. That's actually backwards. The Schedule K-1 is part of the 1120-S. And there's two different types of Schedule K-1s. We're going to talk about the other type here, which is a 1065 Schedule K-1. That's for your partnership return. But this is why it's very important that when you're going to be, when you're looking for information on, federal taxes, what the rules are, what the penalties are, what the deadlines are, make sure you look at the official websites. Don't go with these third-party sites. That might sound ironic since I am technically a third party talking about this. I'm not associated with the Internal Revenue Service at all or the federal government at all. But what I'm showing you here is just information from the horse's mouth. So I'm effectively functioning as a journalist here. I'm taking the official information, I'm presenting it to you. So first we'll talk about the penalties for the 1040, because everyone has a 1040, right? You're going to be filing one of these. If we go down to the penalty section. So here's the actual way the penalties are calculated. So we're specifically talking about failure to file, so you have that right here. And there's actually a code here in this article for exactly where you can find this, but the information is right here. So failure to file, how do we calculate penalties? 5% of unpaid tax required to be reported. reduce the failure to pay penalty amount for any month where both penalties apply. So when it says both penalties, that's referring to, failure to pay tax on reported return. So the two do kind of balance out, but we're going to notice here is if we come down here, the failure to pay tax is only 0.5% of tax not paid by the due date. The failure to file penalty is a full 5%. That is 10 times the amount. So you get charged 10 times the amount of unpaid tax on failure to file as you do on failure to pay tax report on the return. It's charged each month or part of a month the return is late up to 5 months. Now here's an important line. Applies for a full month even if the return is filed less than 30 days late. So if you are late to file right now and you file your 1040 today and you didn't have an extension in place, you're going to have a failure to file penalty and it's going to apply for a full month. Say you wait 1 month and 1 day after the deadline to file. If you do that, it's 2 months worth of penalty that's going to accrue. Income tax returns are subject to a minimum late filing penalty when filed more than 60 days after the return due date. So once you get to this 60-day mark, there's a minimum that's going to apply regardless of whether you even owed any tax. Now, this does include your extension period, so the extension helps you to avoid this, and that's why filing an extension is very important. The minimum penalty is the lesser of two amounts. 100% of the tax required to be showed on the return that you didn't pay on time, or a specific dollar amount that is adjusted annually for inflation. The specific dollar amounts are as follows. So there's some bullet points here. So returns due on or after the 1st of 2020, which is this year, you have a minimum penalty here that's going to be $435, assuming you're at that 60-day mark. Now, before I move on to the 1065s, I just want to again reiterate this. So if you file a return but you don't pay the tax, you only accrue 0.5% instead of a full 5%. So look, even if you don't have the cash to pay your taxes, if you have to go on an installment plan or whatever the case may be, if you file your return, at least file your return, get it done. If you have to amend it later, you do, but get it done or get the extension done. Your penalty is going to be much less than if you didn't file a return at all. The worst thing you can do is just not file a return. Don't ever not file. That's the big thing. That's the big takeaway here. If you take nothing else away from this video, let it be. You should never fail to file. Always file something. So now that we've covered, how penalties are calculated here, and, if you want to read this entire thing, you can. This is, again, on the IRS website. You can kind of see, I got irs.gov above here. Now, if we go to my next tab here, this is actually for Form 1065. Now, a 1065 is what you file if you have a multi-member LLC that is not elected to be taxed as an S or C corporation. So let's say that you and your spouse start an LLC together. You're both members of the LLC. When you register your EIN, it's actually going to say right there on your SS4, you were expected to file Form 1065 by this date of this year. It's going to be based on when you created that EIN. So a 1065 is a partnership return, and similar to an 1120S, it generates a K1, and you're going to attach that K1 to your personal taxes, and you're going to pay taxes based on that. The LLC itself does not pay taxes in either case, but in the case of the Form 1065, you can potentially generate self-employment tax on your K1, whereas with the 1120S, you will not generate self-employment tax, and that's why some will choose to use that if it makes sense. So if you have a Form 1065, late filing of return. Now, this is actually, as opposed to, this last tab was actually more of an article, and they have references to different notices and IRC codes where you can see, full on the official rules. What I actually have here is the instructions for Form 1065. Now, a lot of people don't know this, but every single form the IRS has, so everything, everything from W-2, 1120S, 1040, 1041, everything has a set of specific instructions around that form, and a lot of key information can actually be found there. So if you're ever confused about, the type of tax return you file, you can find the instructions for that form, and there's really good hard information in there. And, again, the IRS makes all this information public, so anybody can look this up. One quick Google search will more than likely pull up irs.gov, and they want people to find this. Penalties Late filing of return. This is from the instructions for Form 1065, which is going to be a partnership return. A penalty is assessed against the partnership if it is required to file a partnership return and it A, fails to file the return by the due date, including extensions, or B, files a return that fails to show all of the information required, unless such failure is due to reasonable cause. The penalty is $205 for each month or part of a month for a maximum of 12 months. The failure continues, multiplied by the total number of persons who were partners in the partnership during any part of the partnership's tax year for which the tax return is due. Now, it's important to note this sentence because what this means is, let's say your partnership, again, we have you and your spouse. You're the partners in this partnership. The penalty is not just calculated, it's not just a multiple of the month by an amount. It's a multiple of the number of shareholders. So if there's two of you, whatever the penalty calculated is, you're going to pay double that because you're going to get a penalty for yourself and you're going to get a penalty for your partner for fail to file. And I've seen this happen. I've seen two separate forms come in and it be, a crazy amount of money. If the partnership receives a notice about the penalty after it files the return, the partnership may send the IRS an explanation, and the service will determine if the explanation meets reasonable cause criteria. Do not attach an explanation when filing the return. So that last sentence, if you're filing and you're filing late, don't attach your explanation, then you want to deal with that separately. There's something I do want to point out here. So $205 for each month or part of a month for a maximum of 12 months. So that means your maximum penalty is going to be 12 times $205. Your maximum penalty per partner is $2,460. So I've seen instances where, we filed returns that were, due a while ago, and unfortunately, they hadn't been done yet. And, each partner is getting one of these penalties. So they rack up, 5,000 worth of penalties between the two of them. And remember, this is multiplied by the total number of persons. So say you have 3 shareholders, 4 shareholders. That number will be multiplied each time. Now, here's the one silver lining, and I'll say this before I move on from this. If the partnership presents a reasonable explanation, there's a potential for an abatement. So I have seen instances where, you get an abatement for a penalty like this based on just based on it being a first-time abatement. But I've also seen instances where the person had penalties for a partnership abated before. Abate means remove. They had it done like that before, and we were able to present an explanation, and, one of the instances that comes to mind, the person had a couple years worth of partnership returns that weren't filed. And what had happened was the previous preparer had put the business name on the return, but not the EIN, I believe was the case. So because the EIN wasn't on there, the return didn't register as filed. So when we went back and corrected it, it triggered all these penalties. Because we were able to put an explanation together around that and say, look, this really does lean more towards, being on the preparer, made a mistake. In that instance, the IRS agent that was handling that was willing to abate the penalties in additional time, in full too. Like, it went down to 0. So, I want to take this moment. I've done videos before on how to contact the IRS, what are the best practices for that, and in that video, I really try to humanize and just remind everyone that, look, the people who work for the IRS are people just like you and me. They're human beings. And you'd be surprised I think a lot of people have a pessimistic view of getting stuff like this taken care of. You'd be amazed how reasonable the IRS agents can really be. They can be very approachable, very easy to talk to, and they want to help. So if you're in a situation, if you're watching this video and you're in some kind of situation where you owe a bunch of penalties and you're not sure what to do and you come across this video, don't be pessimistic. Honestly, find a good EA, not a CPA, find an EA who deals with tax resolution, and you'll probably get a very favorable outcome if you get the right person in your corner. So with that being said, we're going to move on to 1120S. Now, you might have noticed there's no failure to pay penalty here. That's because, like I said before, 1065s don't pay, partnerships don't pay taxes. Their shareholders pay the taxes, as they do with the 1120S. So let's go down to the penalty section on this. It's actually very similar. So this is the instructions for the actual form. So this is instructions for Form 1120S 2019. Late filing of return. A penalty may be assessed if the return is filed after the due date, including extensions, or the return doesn't show all the information required unless each failure is due to a reasonable cause. See caution earlier, and in this instructions there is there's a little reminder here, don't attach an explanation when the corporation's return is filed. The penalty is again $205 for each month or part of a month. Up to 12 months the return is late or doesn't include the required information, multiplied by the total number of persons who are shareholders in the corporations during any part of the corporation's tax year for which the return is due. If taxes, as you can see, this is overall very similar. There is a minimum, of the $435 that's going to apply here. And there's going to be a penalty that's going to be multiplied by the number of months in shareholders. So if you only have one shareholder, obviously that multiplier isn't going to kick in. But if you have multiple shareholders in an S corporation, that is going to kick in. And I'm going to wrap all this up by just pointing out one last thing. I mentioned before, you get your Schedule K-1 from the actual corporate tax form. So if you file an 1120-S for your S corporation, that tax return generates a Schedule K-1, and that Schedule K-1 gets reported on your personal income taxes, which is that Form 1040. You're going to pay taxes based on the amount that's on that K-1. The one thing I want to clarify, though, is that even though we often refer to these as distributions from the S corporation, the K-1 does not reflect the amount you received in cash distributions from the S corporation. What this number actually represents is the net profit of the business. So regardless of how much you received in cash for the business, if you were the owner of an 1120, if you were the owner of an S corporation and you're responsible for the tax return, you're going to be responsible for what's on that K-1. If you're the only shareholder, you're going to get one K-1, and that one K-1 is going to have the net profit for the entire business on it, and you're going to be responsible for that on your personal taxes. Likewise, if you have a business partner, say you have a 50-50 partner, you're going to get a K-1 and they're going to get a K-1. Half of the net profit's going to get put on one of those K-1s, half of the net profit's going to get put on the other. And much like with a 1099 or a W-2, what this form is basically saying is that you're responsible for paying taxes on this money. That's really what a 1099 or W-2 is when you really get down to it. Your brokerage gives you a 1099 because it's a way of telling the IRS, I'm not responsible for this money. This person is, my contractor. Same thing with a W-2. You have that W-2. It shows how much you're made. That's your employer saying, hey, this is what they're responsible for. This is what I'm responsible for. That's an expense to me because I paid out their salary. So the K-1's a lot like that. Because an S corporation cannot and does not pay any taxes on its own, someone has to be responsible for it. So it gets pushed onto the K-1, you put the K-1 on your personal tax return, and you pay taxes on the net profit of your business that way. I hope you found this video informative. If you want to be the first person to get new content like this, make sure you're in our Facebook group as well as subscribe to our email list. If you need help sorting out some back tax returns, feel free to give us a buzz or schedule an appointment with us as well. That's going to wrap up this video. I'll see you in the next one.